Welcome to this investing series, which has only one goal for the next few years. I plan to have $500 each month in dividends passively from the $500 invested each month. And again, each time I will invest in front of your live to show you which stocks I buy, why I buy them, and also how I adapt to the markets. Hi, Jared here, and today let's invest in the stock markets. So for the last month, my $3,000 portfolio went both up and down. I own 20 stocks, which make my portfolio well diversified. And again, I own stocks in 8 different sectors, including healthcare, energy, consumer staples, financials, industrials, consumer discretionary, and also information technology. And this month, I received dividends from literally 1,000 companies. On March 2, I received dividends from 2 companies. The first one being Visa of 0.18 euros or $0.22, and the second one is from Intel of 2.12 euros or $2.63. On March 9, I received a dividend from Microsoft of 0.08 euros or $0.09. On March 10, I received a dividend from Johnson & Johnson of 0.21 euros or $0.23. Let's continue on March 11. Again, I received a dividend from 3 companies, Chevron of 1.79 euros or 1.89 euros, UPS of 0.31 or $0.33, and finally 3M 0.41 euros or $0.52. On March 16, I received a dividend from McDonald's of 0.18 euros or $0.24. On March 22, I received a dividend from Stanley Black & Decker of 0.82 euros or $1.11. And finally, on March 25, I received a dividend from 2 companies, including BlackRock of 0.27 euros or $0.35, and also Home Depot of 0.76 euros or $0.97, which brings our total dividend payout to 13.96 euros or $15.5. Alright, so let's continue this series with $500. Now, I decided to divide it into 2 today for the 2 stocks I will buy. And spoiler, this video will probably change the course of the next video to come to at least the end of the year. Alright, so let's start with the first and last true stock of this video, which is a company founded 186 years ago in 1847. And it manufactures agricultural machinery, heavy equipment, forestry machinery, diesel engines too, and lawn care equipment. And if you want one last hint, the company's slogan is "Nothing runs like a Deere." Of course, I am talking about Deere & Company, which is more commonly known as John Deere. So, John Deere has 3 main operating segments. The agricultural segment, so the production and sale of tractors, combines, sprayers, and planting and seeding equipment too, which account for almost 60% of their total revenue. The financial services segment, so retail financing and leasing for their customers and dealers around the world, which represent 21% of their revenue. And the construction and forestry segment, so production and sale of loaders, excavators, harvesters, etc., which represent 19% of their revenue for a total revenue of $52.5 billion. John Deere has been paying out dividends continuously for more than 27 years now and has consistently increased them for a current dividend yield of 1.13%. Despite the 2020 pandemic, gas prices, inflation, and supply chain problems through 2022, the company still shows strong net income and earnings per share. Its net income increased by around 34% a year on average for the past 5 years, with a good increasing earnings per share of roughly 36% a year to reach 23.98 in 2022. Also, a good stable return on capital of roughly 9%, as well as a decreasing price-to-book ratio of 6 today. It also has 1.30 times more assets than liabilities, which is not the best, right? But still, the ratio keeps getting better and better each year, so increasing assets. It also has a good PE ratio of roughly 15, when the average of the US machinery sector is at around 26 today. So in short, a great company which is also buying back its own shares, currently trading at less than 15 times its earnings. And also, what about its future? Well, John Deere made serious investments that can be summarized in 3 important points. The first one being precision agriculture, which uses sensor and data analytics and other fancy tools to optimize farming operations and also improve yields. It also acquired Blue River technology, which blends computer vision and machine learning to precisely apply herbicides on the fields. We then have electric and autonomous vehicles that have been in development since I think roughly 2016 for automatic planting and spraying on the fields. And finally, sustainable operations by achieving carbon neutrality by 2015. So to make things simple, John Deere has also been investing in clean energies such as wind and solar to power its operations. Alright, so the first company, like I said, is John Deere. Or Deere & Company works better right there. I will create a savings plan, so that's basically the same thing than buying the company, but with no fees. Pretty cool. Monthly, beginning of the month, 100 euros or $100, that's typically the same. And there we go. And we finally have a stock that does not really represent one single company. It holds 500 companies in the US. This is the S&P 500. So it is a basket of the 500 biggest US companies, and it historically performed very well. I mean, very well, around 10 to 12% annually on average. But we will not directly invest in the S&P 500 since it would take forever to buy each of the 500 companies. That would probably be not worth the time and effort to put into it. But instead we can buy the Vanguard 500 index fund. Same thing, it is an index fund that tracks the S&P 500. So if the S&P goes up by 1%, the Vanguard S&P will also go up by 1%. And it is brilliant because we only have to buy one stock that holds the 500 other ones. It was created in 1976 by Jack Bogle, the founder of the Vanguard Group, who recently died. He was known and loved by Warren Buffett himself for its idea to allow millions of investors in the world to maximize their return to around 10% a year, while allowing the rest of the investors to do the same without compromising their return. Alright, so how to invest in it? And I found two good options. You can either invest on the Vanguard website, you can start investing with $1 only, and it has the advantage to have very low fees. Right, it says 0.03%, which is close to nothing for the 10% gains a year on average. Or you can buy the index fund from your favorite broker. I use Trade Republic for that because I live in Europe. And that is what I will do today so that I can track everything smoothly. Alright, so the second company to buy is 500 companies. So the index fund, S&P 500, same thing, savings plan, beginning, 400 euros. And there we go. So if you have liked this video, feel free to check my other videos right there on the same format and series, so you can follow my investing journey from the beginning and how I got there. Well, thanks so much for watching. Feel free to leave a comment down below, subscribe if you want to see more, and as always, I will see you in the next one.